Good day and welcome to the Funtendo Market Report on March 3, 2025, your premier source for financial market news. Gold and silver, the shine dulls. For now, gold, the old faithful of safe haven assets, took a slight dip today, sliding $2.60 to $2,898.50 per ounce. A stronger US dollar and profit-taking after a strong rally seem to be the main culprits. Some investors are locking in gains, because even gold bugs like to cash out once in a while. Silver followed suit, slipping alongside gold. It may not be making headlines, but it's still doing a better job of holding value than some stock portfolios today. Oil slips on demand concerns. Oil prices also edged lower, with crude settling at $68.04, down 33 cents. Concerns over global demand, OPEC's next move, and the strength of the economy are keeping traders on edge. While supply remains stable, the demand outlook is turning murky, especially with signs of a potential slowdown in key industrial sectors. The oil market is like a bad relationship, one minute it's up, the next it's crashing, and no one really knows where it's going. Crypto takes a beating, panic in the digital streets, and then there's crypto. Bitcoin, Ethereum, XRP, and just about every other digital asset got absolutely hammered today. Bitcoin plummeted to $84,163.72, while Ethereum fell to $2,102.57. XRP and stablecoins also saw declines. The trigger? The US government's new strategic crypto reserve. Yes, Washington has officially decided to start hoarding digital assets, but instead of reassuring investors, it's doing the opposite. A massive on-chain transaction from a government wallet sparked fears of regulatory crackdowns and potential future sell-offs. It seems traders didn't like the idea of Uncle Sam becoming the world's largest whale, so they ran for the exits. Wall Street's rough ride, the Trump tariffs strike again. Now, let's talk about Wall Street, because today, the market got absolutely wrecked. The Dow Jones fell 649 points, minus 1.48%. The S&P 500 dropped 104 points, minus 1.76%, and the Nasdaq tumbled 497 points, minus 2.64%. Meanwhile, the VIX spiked 16%, hitting 22.78, signaling rising market fear. So, what happened? Today's sell-off was triggered by new tariffs imposed by President Trump, this time, aimed at Mexico and Canada. These fresh import duties, set to take effect immediately, are rattling investors who fear they could disrupt supply chains, raise consumer prices, and drag down corporate profits. What do these tariffs mean for the market? 1. Higher costs for businesses. Companies reliant on Mexican and Canadian imports, particularly in automobiles, manufacturing, and agriculture, will see costs spike overnight. 1. Investors are reacting by dumping shares in these sectors. 2. Inflation fears resurface. Tariffs ultimately act as a tax on consumers, driving up the price of goods. 2. If companies pass these costs on to buyers, inflation could rise faster than expected, putting pressure on the Fed to respond. 3. Global trade tensions. Mexico and Canada are major US trading partners. 3. Retaliatory tariffs are already being discussed, and traders fear this could escalate into a full-blown trade war. Biggest losers, who took the worst hit? Crossmark, automakers, companies like Ford, GM, and Tesla saw sharp declines, as their supply chains rely heavily on Mexican parts and labor. Crossmark, retailers, tariffs mean higher import costs on goods, which could cut into margins for big box stores like Walmart and Target. Crossmark, tech stocks, investors dumped high growth, high risk stocks, preferring to rotate into defensive positions.
Was anyone a winner today?
Black tick mark, defensive stocks, sectors like consumer staples, utilities, and healthcare managed to hold up as investors sought safety. Black tick mark, gold miners, even though gold itself dipped slightly, mining stocks held strong, reflecting ongoing economic uncertainty. The silver lining, because we all need one. Yes, today was a rough day, but let's not despair. Volatility creates opportunity, and seasoned investors know that moments like these separate the bold from the nervous wrecks.
As for crypto, panic selling rarely lasts forever, and long-term investors will likely buy the dip as the dust settles.
So, keep your tea hot, your stop losses tight, and your sense of humor intact, because tomorrow is another trading day.
Thank you for watching the Funtendo Market Report.
Stay profitable, stay classy, and don't let the markets